welcome. I am Jadita Stanton. We have Reginald Perriman, Shaka Williams. We are TSARE. This is the There's Something About Real Estate podcast where we talk all things real estate. And today we have with us Drake Braun of Flagstar Bank.
What's going on?
Thanks for having me, guys.
Right?
Appreciate it. Yeah.
All right. Get into some real estate.
No more golf?
Some mortgages.
golf.
We can talk golf all day.
Golf is real estate.
We
It's
going
the same.
ham on
It's
the
the
golf.
same.
Man.
It's the
That's
same.
going to be a whole show in itself.
Reggie
Yeah.
started with traveling to France, and then as soon as he said the golf, it was
Downhill spiral. Yeah. So-
Right.
Drake, you look like you're like 16.
Oh, thank you. I'm 29.
Okay.
Yeah.
Oh, that's
my
still
birthday was
young.
Wednesday.
That's
so-
right.
Yeah, my birthday was Wednesday. So
Oh,
yeah.
okay, cool.
Thanks,
Oh,
guys.
are you?
Yeah.
It was Wednesday.
Yeah,
you just
2
now
days
turned
ago.
29.
Yeah.
I mean, that's wonderful. I kind of started there because I knew you were really young, and I like to highlight that in this industry. People that are,
Yeah.
doing really well in the industry.
I
And
appreciate that.
29 young.
yes, yeah, it's a baby.
This is my 4th year in mortgage, though. So talk about like really young. When I was
Right.
25.
Yeah.
Like,
Yeah.
That's amazing.
29 is young.
It is.
Yeah, to kind of have. That's why we was so amazed with my man at 25 investing. You know what I
Yeah.
mean? Or is he 25 now? No, he probably.
Yeah,
No,
he just turned 25. We had a guest that's real young. He's an investor.
Okay.
That's what we were talking
Cool.
about.
Yeah.
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 It's a good age. I mean,
He
you're not the
25
lowest
now?
guy in the
Yeah.
totem pole at work anymore.
I
You're
remember
not
I
older,
dated-
you know.
I dated a
between.
girl that was 30. I thought she was, I was like, I got me an older chick.
Right.
Yeah, that's how I was.
Yeah, I was 23.
I thought 30 was old at 25.
I would not
Right.
have. Yeah, you did have an older chick. Yeah, you had an older woman.
Like, that's crazy. But, I mean, like, we have sons that are not, I mean, I do. My son will be 23 in March. So, you guys are not that far apart. You're, like, almost in the same peer group.
I wouldn't have guessed that.
Yeah.
But-
My daughter 27.
Yeah.
Yeah,
Okay.
my oldest.
So,
Perfect. We have more people to golf with. That's what I just heard.
Exactly.
yeah, no, that's, I mean, but even that, the sport in itself, I mean, you do some networking on the golf course.
Yeah, absolutely.
All the
Yeah,
time.
that's kind of why you do it, right?
Yeah.
You know, it's
That ain't why I do it.
yeah.
Reggie be out there for real.
Yeah.
Everybody else be playing, and Reggie being killed. He being like Mamba. He be
Yeah.
trying to be Kobe over there. He be channeling. Everybody be talking. Reggie focused.
Yeah.
Right.
No, it's a good activity because there's only so often you can go out for drinks or lunch.
Yeah.
Like golf's kind of that median where you have something to do. You don't have to talk the whole time, or you can just talk about what's
Right.
going on. And,
Exactly.
Reggie don't be talking. Everybody else be talking.
just dial
After
them,
the shot.
AirPods on.
Yeah, I got goals. I got golf
Okay.
goals.
Okay.
Yeah.
Okay.
Look, we're going to get into Drake.
Yeah. Okay.
Tell us a little bit more about yourself and your background.
Yeah, so this is 4th year in mortgage, always with Flagstar. I'm from Birmingham originally. I do a lot between like Birmingham, Royal Oak, Ferndale, Detroit. So Detroit's one of my like bigger markets that I've been in. So we have the 2 branches that I sit at on Woodward and Midtown, and then in West Warren Road, which is just like right next door. So that's kind of my district area. So anywhere between there, but through all 50 states and Michigan. So it's just wherever the mortgages
That's good to
happen.
know.
Yeah.
Sweet.
So yeah, we just merged with NYCB, and they have like a ton of branches over in like Arizona, where the 7500 is, and Florida. So we'll be tapping into that in the next couple of weeks because that merger just closed like January 1st. So yeah, or December 1st. So yeah,
My birthday.
there you go.
All right.
Yeah.
Yep. So what's exciting news in the mortgage industry right now?
Well, rates are going down.
All
so
right.
like typically, like with a 740 credit score, 20% down is like the benchmark, and that's about
Right.
a 6.125. And around November 11th, which is Veterans Day,
Right.
is at a 7.5. So if you're looking at like your average buyer, that's 25K of
Right.
purchasing power that you just got back, which is it's really huge for people that were, let's say, looking at 140, 150, because 150 is way different than 125.
Yeah.
So I think those people are starting to come back out. And for me, like November and December were definitely slower. I think for most people in real estate, title, realtors, those were slower months. They're always normally slower, but this one was different.
Yeah.
And ever since January 2nd, it's been pre-approval, buyers coming back into the circle, new people getting on their horse and getting into the game.
They got goals. They're trying to reach them
goals.
goals.
They do.
Right?
They do. And I tell everybody, like, if you can get in now in the next 2-3 months before April 1st in the spring,
Yeah.
because I think it's just going to be nuts.
Yeah.
I really do. So you can get a good deal right now, use down payment assistance,
Right.
maybe get an FHA approved,
Yeah.
accepted. So
We just talked about that. The November and December of 22 being a little bit slower than what you typically see for the
previous
season.
years.
Yeah.
No, for sure.
I want to hear a little bit. So when you called and you were talking about the program that Flagstar was offering, it reminded me of what the same program that Bank of America had come out with. So can you tell us a little bit about that? Like, what is it called? And
so it's called Destination Home. It's been around for about 3.5 years now. Closed it like multiple times. It's a great program. It's conventional. So it's a 600 credit score, no PMI, 0% down. And that's for any buyer that doesn't own a home. So you don't even have to be a first-time home buyer. So you need $1,000 into the transaction. So for instance, that home that we were looking at, if you have a seller that's flexible, willing to give 3 or 4% concessions, 1,000 is pretty doable. Like I closed one 2 years ago, and the girl brought 1,500 into the transaction. The house is in Hazel Park, redone, 150, and she was in it for 900 a month. So
can you couple that loan with Mr.?
No. So that would replace Mishta instead. Yeah, they can.
Okay.
Yeah, I do Mishta loans too. I think Mishta is great, but we came with that other grant that I was also telling you about. So we do a 7,500 grant for first-time home buyers. It's a gift to equity. They don't have to pay it back. It's a 21 conventional day close. It's based off of 3%.
Right.
So if the buyer is looking at a house at $100K, it's a $3,000 gift. 170, it's 3%, would be $5K up to $250. And then it can go higher than that based on the purchase price. I have a person pre-approved right now for $400K.
Right.
That's going to get $7,500 of their down payment taken care of. And they can use it for closing cost or for buying down points.
Hold on. So the no PMI program does not include, you cannot do that with the
Correct. These are two different. Right.
Oh, okay.
But there's no down payment. So 0% down, no PMI, 600 credit score. So when somebody comes to get pre-approved and they're a first-time buyer, I'm trying to put them into the 7,500 first. You need a 680 or higher. But if you're below a 680, typically that person's going to go FHA Mishta.
Right.
And that's when I then try to pivot them into the 0% down conventional, because it would be conventional. There's not the 3.5% down, no PMI, and then the grant that you get with Mishta, you have to pay back. There is no grant. So it alleviates all that for that person.
so the Destination Home Mortgage is the 600 score,
Yes,
no PMI.
correct.
And so what are the caveats? Like, is there, can you have a certain amount of money not saved
There's
in the bank?
no asset limit. The income limits kind of varies. In Detroit, and like Pontiac is like 82,000. You can make under than that, and then you can qualify, and that's per buyer. So if you have a husband and wife, and he's making less than that, and she makes more, we can just put him on the loan.
Right. So it's not based on household income. It's the individual
That's
borrower.
applying for the loan. Correct. Because that's another minus of Mishra, is everybody that's living in the house,
Right.
and anyone over the age of 18. So if there's a child over the age of 18, they all have to have a 640 or higher, and then be under the income limit too.
Right.
So
You mentioned that it's not just for first-time home buyers, that they just can't own a home.
correct.
So if I own a home now, I sell it, and then I come and I can apply for this loan?
Yes, sir.
Okay. So I just have to close on my other home first.
Yeah, and we can do them simultaneously too. So if you close on Tuesday, you can
Right.
use the program on Wednesday and purchase the house. It just you'd have to have the CD.
Almost like a FHA.
Yeah.
Right.
Yeah.
Do you have to pay this money back?
Well,
Okay.
we talking about, so we're
So we're
mixing
talking
up
about
the
we
program.
mixed it. Sorry,
Yeah.
this is my apologies.
Yeah.
The destination home is just a 0% down, so you don't need a down payment.
Right.
There's
And then-
no down
Oh,
payment
okay.
assistance.
Right.
That-
Yeah. Sorry, I confused. That was my fault.
Okay, no
And then
problem.
there's a first-time home buyer, just Flagstar gift is $7,500 that you do not have to pay back. It's a gift to equity. You could sell the house the next day. You still get the money.
But that you're gonna have PMI with that though.
Yeah, that's true.
Well, we need to talk about them. I want to
Correct. Side to side.
separate.
Yeah.
Okay.
So destination home, one of you're talking about the caveats. It's also based on the census income track. So like
Right.
say for Detroit and like Redford, like there's a lot of spots in Redford it doesn't work for, but most of Detroit it does. Works in Southfield, most of the East Side, Madison Heights, Hazel Park, all those areas are good. So, but with the grant, the 7,500 that we're talking about, if you qualify, it's any county. So there's no restriction. So sometimes if people are very picky,
Right.
they can't. But those people that are in destination home are below a 680 credit score, and they would be going FHA Mishta anyways in that scenario if they didn't have the down payment. So they're kind of restricted as it is. So
Right.
this program saves people $6-7 grand up front.
Okay, so you're saying like this program, you close this with the 400, or you have a $400,000 client that can use this program.
The 7,500. Yep.
No, that's separate.
Yeah,
so
sorry.
she's talking
That's
about
what I'm
this.
trying
She's
to keep
talking
it
about
separate. Like, I would like
So Destination Home has a
Only.
purchase price limit of 225.
Okay,
The 7,500 does not have a purchase price limit. It has, it's income restricted. So that one's 72,000. The 7,500. Sorry.
Okay.
So like if you don't have any debt, 400,000. This is what you cap out at 72 and be able to afford the payment. So that's kind of how I got to that buyer. He's looking in Wixom. So
Okay.
So with the Destination Home loan, you cannot. There's no down payment assistance you can do with that. That is
Correct.
Because
that
it's
is
just zero
Correct,
down
correct.
period.
Right.
Correct.
And then, but there is no PMI. And then now with that income census tract, what does that have to be at? Low or moderate? Or
Lower Mod is the track name.
Okay.
Yeah.
Okay.
Yeah, it's off of the FIFIC. So, and it changes every year.
Right.
In like
Right.
July.
But y'all have like a, so there's another bank that has, so I don't know, I haven't even used the Bank of America program, but there's another bank that has a similar program. So y'all have like a,
It's a quick URL. You pop in the address and it tells you if it qualifies.
Right,
Yeah.
right.
But
so,
this program is not new though, right? I heard
No.
you say it's
Yeah, it's
because
3.5
a lot of
years.
people once B of A made that announcement,
Yeah.
everybody was like, "Oh, it's a zero down program." I'm like,
Right.
it's always been
right. They
zero
did great
down
marketing
programs.
for that. I don't know how they got it out there, but
Yeah.
so maybe
well,
your props.
the issue was the what was it? No credit.
no credit.
No credit score.
Yeah.
They wasn't going on credit score.
Yeah. Did you guys close any of those Bank of America loans?
I think you had an agent.
We got one agent that is so I thought she closed and it didn't close yet, but it is going to close. I'm very confident that she's actually going to close on it because with the issue that they have right now is I think very small. So I'm confident in saying that I know one person that's going to close that loan, but I don't know anybody
It's
else.
been around since Halloween.
Yeah.
So I mean that's
Yeah.
that's what I'm saying. Like
You didn't know
that's
nobody
tough.
that did it.
I mean, until it
Yeah.
closes, right? It's all
Right.
So I'm still trying to make sure I
Yeah.
understand the Destination Home Mortgage. We have,
Correct.
as low as a 600 score, no PMI. Okay, so with the down payment, so there's zero down, but you have to have how much invested? Well, you still have closing costs that have to be paid, but then what if all of the closing costs are covered? This is conventional, so you can't get more than 3%?
We're still talking about Destination Home, correct?
Correct.
Yeah.
4% is the maximum on Destination Home
Right.
sellers
So
concessions.
4% sellers concession, zero down.
Yeah.
So the buyer
Normally 4%.
will end up bringing maybe 2-3%
Yeah.
to cover closing
Yeah,
costs.
they have to at least put 1,000 in the transaction.
Okay.
And like the house I was talking about in Hazel Park, I got that lady to 1,500. Is what she ended up putting after the concessions and things like that.
And that's usually the amount of the EMD.
Correct.
So
Correct.
the $1,000 is the $1,000 that has to be vested.
Mhm.
That's not like a this much, like either this or this percent, whichever's greater.
So $1,000 minimum, but let's say if the house is $80K, it's still $1,000, and that's 1%. So you're right. It would be, let's say if it's like 150, it's still that 1,000 is the minimum. Yeah.
Okay.
So if it's zero down, if seller is giving concessions, regardless if the concessions cover everything, they still have to have a minimum of their own money of $1,000.
Correct. Yeah.
So-
So similar to Mishta too, because
Right.
Mishta has that like minimum requirement.
Right.
Mhm.
So I want people to know that too, because every time we talk about zero down, people literally think they don't have
Right.
to bring any money. There's always some costs, even if you're paying it up front, if you're getting the credit back, whether it's EMD or you're going to pay for appraisal, you're going to pay for
Yeah.
something.
Yeah.
So a lot of people
Yeah.
hear that and they just think they don't have to bring anything.
No
Yeah.
money out of pocket. Right?
Like
Yeah.
they say hypothetically, if there's like no AMD, like our appraisals are 520. So
Right.
if you paid for that, that would count towards your $1,000.
Right.
Yeah.
You got to have some skin.
Yeah,
in
some
the
skin in the
game.
game
Right.
for sure. And usually, I mean, you guys know better than I do, but sellers don't really accept an offer without
Right,
an
on
EMD.
EMD, right.
So, I think like if you're
Unless
listening to
your
this- yeah.
agent is Janita.
yeah. So I don't know. I would, fair rule of
Right.
thumb, I think like you said, 2 or 3K is what you should be expecting to,
Okay.
spend up front. Obviously there's exceptions to that, but
Right.
yeah.
Okay. Did I get all of the questions answered about the Destination Home Mortgage?
Mm-hmm.
Okay. So then the 7,500 gift equity, is that the name of the program?
Yeah, there's not like a name to it, so unfortunately, but yeah.
Is that that's the Flagstar program you guys
Yeah, it's
have?
our funds, it's our CRA.
And is that one for first-time home buyers
Yeah,
only?
only.
Okay.
And then you can't. So a first-time home buyer would be somebody that hasn't owned a home in 3 years. So if they sold 5 years ago, 4 years ago, they're back to being a first-time home buyer.
Okay. What about because we get a lot of people where maybe grandma added them to the deed to avoid probate or something like that. If their name is on title to another property, they don't qualify?
Unfortunately, no.
All right. Don't let your aunties put you on deeds.
Yeah.
Are there credit requirements for that?
680 or higher.
680. Okay, so
Yeah.
680 for the
7,500. Yeah.
Right.
and it's really 3%. So it's not really.
Yeah.
It's
So
up to 75.
Yeah, correct. That's a huge thing.
Yeah.
I've been explaining that because like all the flyers and the advertisements say like 7,500,
Right.
but it's up to that 3%.
So
It's
a
not
$200,000 home, they can get the full $6,000 down. But if it's above that, then it's only if their down payment is $15,000, they're only going to get $7,500.
Max that 250.
Basically.
So when you get to the
Right.
250,
Yeah, well,
Yeah,
the
250,
program's
right.
250 anyway.
Right,
So
but yeah, let's say if you so that program can go up to 400.
Oh, that one's up to
yeah.
4. Okay.
So like for example, if you are
different though.
Right.
You separate. That's the deep. That's
Yeah,
the
yeah.
That's the first one that we
Yeah.
talked
No,
about.
the 400,000 is the 7,500.
No.
she's right. It's all right.
Is it?
Yeah.
Well,
I'm the worst
well,
guest
hold on.
right now.
Well, can
No, you already good.
No,
confusing everybody.
Because so the 400,000 it's up to 400,000, but you're only going to receive a max of 7,500.
Correct. That's correct. Yeah.
Right.
All right.
So, but what I was gonna say, so like, let's say if you have a house for $250 in Southfield,
Right.
and you're able to get 3-4% sellers concessions, that person could also come out of pocket with $3K because
Right.
their 3%'s taken, and then 4% from the seller.
Right.
So it's it's really advantageous to be able to take advantage of it, and yeah.
You got it.
So you don't have to have a minimum invested. So like because when I understand programs, I can make it to where the buyer is at 0.
Yeah.
Right.
So this one would also have to have 1,000. So I think like the benchmark for any of these down payment assistance, Mishta or Flagstars, is at least 1,000 into the transaction. So.
And then there's no like or percentage or like whichever's greater. You know what I'm saying? So,
Right. No, it's just 1,000.
It's still a minimum.
Yeah,
Right.
it's the minimum. So.
So the advice to our listeners, if you're a buyer looking for any of these programs, you should probably have a minimum of maybe about 2,000.
Yeah,
Would that be fair?
That's true. Because so one more thing I wanted to kind of go to, like once you kind of get into the nitty gritty of the programs, they're going to want 1 month reserve. And what that means for like the non-mortgage talk is just 1 month payment. So $1,200. And that could be in an IRA, 401k. You won't spend that at closing, but the underwriter, who the person is that reviews the loan, wants to see that you have the next payment ready to go. So.
Right.
So these are both conventional programs.
Yes, sir.
So you're both at 3% seller concessions max.
4%.
4%. Oh, so that's that's
Yeah.
It's helpful.
That's
is that
real helpful.
Flagstar? Is that like an internal? So Flagstar is allowing that person to receive up to 4%.
Yes.
Okay.
It's a Flagstar only program.
Correct.
No, I know the programs are Flagstar only, but I'm saying
Yeah. I'm not sure if other like down payment assistance is 4%. I'm not sure if that's across the board like that.
Yeah, no,
Conventional,
that's not what. So most of the time when you get a pre-approved with conventional, you're allowed to get up to 3%, like across the board.
Oh, okay.
Typically,
yeah,
you're
just for
allowed,
like a 20% down conventional
I
loan.
mean, doesn't matter.
Right,
Even
right.
with
Just
5%.
Yeah,
Right,
you can
you
get
can
up
do
to
the
3%, and with FHA you can get up to 6%.
Right.
So this obviously means that Flagstar has an internal override system saying, yep, our underwriters will approve this if you are able to get this buyer 4%. Are there any other things that Flagstar offer? Because I know sometimes when people close loans with like the bank and then they open up like accounts and things like that, they get all types of like savings and incentives and money back. And
absolutely. So like for Flagstar, if you open a Flagstar bank account like during the mortgage process and then you sign a form saying you'll direct deposit $250 a month for 18 months to do it, they take $500 off of closing. And then if you set up the mortgage to be automatically direct deposited, once that first payment's made, direct deposited into that account, Flagstar will then give you an additional $250 into that bank account. So there's possibly $750 there as well. Yeah.
So what would you say the no PMI is saving the buyer on typical loans?
So
from 100, let's say like from 100 to 150,
yeah,
150 to 200.
So PMI is based off of how much you put down and then your credit score.
Mm-hmm.
So like if you're at a 670 credit score and you put 3% down, that PMI I've seen it, can go up to like 175. FHA can go up even higher, 250. So really, like the no PMI program can save you with just between 100 and 250 a month, depending on your credit and your situation.
Right.
So, and for people that don't know what PMI is, an extra payment that you make on your loan, that's kind of like a penalty payment because it doesn't go towards the principal, it doesn't go towards the interest. So if you're able to not have it or have it as small as possible, that's the goal.
Do you think some of these programs are underused? Like,
Yeah.
are you surprised that more people aren't applying?
100%.
Okay.
Yeah.
Because I see that with Mishta. I see that with...
Yeah. Well, the thing is with Mishta, I feel like they do a very good job advertising.
Right.
I get a lot of people calling me asking about Mishta.
Right.
And we do them. And occasionally I will do them if people want to, but we have these other programs that are so much more superior.
Right.
And that's when I explain kind of what we've been going into. And we end up putting them in that one. But
right.
like, I don't know, the program Destination Home has been around for like 3.5 years. We've been closing them like crazy. And Flagstar's branches are all over. But I don't think we're getting the word out properly because more people need to know about it for sure.
Why do you feel like it's a superior product over Mishta? I mean, I have my ideas, but I want to know.
The zero down or the grant program?
The grant program.
You don't have to pay it back. And then you don't have to wait on Mishta to then turn time.
That's what I was thinking.
So, and then it's also flexible because not everybody in the house has to qualify, just the person applying for the loan.
Yep.
So, and then I've done a lot of Mishta and I feel like they always...
Finicky.
The guidelines they're strict, and then they're also very like if you're trying to get the OT income used to qualify, they don't give it to you. If you're trying to not have the OT because it pushes them over the income limit, they also put it that way. So it's hard to get that money sometimes for people. And then what's tough is so how it works. The underwrite for Flagstar is roughly about 20 days. And then it goes to Mishta, and that can be 2 weeks. Sometimes it gets up to 3 weeks, depending on how many.
Right.
So they can just deny it at that point. So then you're almost 2 months into the process.
Okay.
So with the grant, like what we always do is we grab the documents up front, run credit, take a meticulous application, put it through underwriting without a purchase agreement. So when it comes out, I see all the conditions. I see if there's any potential snags. We knock those out, and then I write the pre-approval. So my pre-approval process takes a little bit longer.
Right.
But my guarantee is it's 100% it's going to close. I don't know what that secondary underwriter at Mishta is going to look at. But like I said, you don't have to do the grant.
So I'm going to ask a bad question because these are conventional products. So obviously you have to be under 45%.
So this correct. 45% for Destination Home. The 7,500 grant can go up to 49. So you get a little bit extra wiggle room there.
So 7,500.
Explain that to our viewers.
Yeah.
Nobody know what you mean.
So you can go ahead or you want me to go?
You go.
So DTI is debt to income, how much you make, and then you subtract how much you owe monthly on things like credit cards, student loans, car payments, and then that's how you get that number. And that's before taxes too of your monthly income. So let's say if you make $4,000 a month, you have no debt, your monthly mortgage payment can go up to $2,000 a month, which in my opinion is pretty tight budget. Like one thing I do now, especially with the interest rates being a little bit higher, I ask every buyer, what do you want to keep your mortgage payment under? And they I think it just happened today. The lady goes, $1,200. I'm like, okay, where we're looking at like 140, 150. She's like, I've been looking at houses 190. I'm like, well, this is going to put your payment up. So you technically you can qualify.
Right.
So let you know that, you have that right, but your payment is going to jump 300, 350. So just make sure that you're ready for that. Because, I mean, when you think of it, if you're just thinking about your income right now, half of it just goes right to your housing payment. It's a lot.
Right.
And people push that limit for sure.
So people push it all the way up to the 49 or the 45.
Yeah.
Because it's one thing what you qualify for, and it's another thing what you can actually afford.
Right.
Budget for.
So I always have that conversation with people.
Okay.
Yeah.
Cool.
Yeah, I think that's pretty big. Like, the turn. So explain the turn time, because I think that's something else that, just listening to it, people really wouldn't understand what you mean.
Turn time on the Mishta versus the 7500. So the biggest thing when you're getting your offer accepted is being as competitive as possible. Conventional over FHA, higher down payment over lower down payment. Which lender did you use? Is the lender communicating with the seller's agent and the buyer's agent? Obviously there's some stuff the buyers do. Sometimes they write letters and put pictures, but that's, neither here nor there. But another thing is, when do you want to close?
Right.
Some people they're moving out of state in a month. This needs to close. So if our buyer can close in 20 days versus the buyer that, because of these different programs, has to close in 45 days.
Right.
Unfortunately, that person's probably going to have a lesser chance of getting their offer accepted.
Right.
So closing the loan faster helps the buyer be more competitive. And that's ultimately what it's about, is getting that person in that house.
Right.
Yeah.
So
Do you put when you make an offer that's conventional Mishta, do you mention that it's Mishta?
I do. I do.
Y'all suck.
I do.
So,
Because you always
not
get
they
the call
price.
from the listing
It's
agent
not-
saying,
it's not
why
they
did you tell
business.
me
And that's the
but
thing.
the whole thing is, so it's arguable,
It is
right?
arguable.
It's still, so it's nobody's business where I'm getting my money from, right?
Correct.
Now I can,
It's not.
I don't know about
It's
that.
not.
So
I can
Well,
be.
let me ask you this. What timeline do you put for closing?
Oh, I always put the time that's needed for Mishta.
Okay.
Like if
Well,
I
then
write,
that's
yeah.
good.
If
Yeah.
you're lying,
Yeah,
that's
'cause
a
if-
lie.
yeah.
If you say
Because
30 days.
I get
yeah.
offers that's conventional and they put 30 days.
Okay, yeah.
And then after the appraisal is over, 3 weeks in, then all of a sudden they like, we
need
waiting on
extension.
Mishta. We need an extension.
Can't be
No,
doing that.
like
Can't
so
be doing that.
if I were to write a contract today, which is January 20th, my contract would be, we would go to February 20th, then because February is a short month,
Right.
so I probably would write like a March 15th contract. Now I'm gonna get a call from the listing agent at that point. I may or may not say, well, we have to go through Mishta. It just depends. But so if I get asked directly, like, is this a Mishta deal? I will say yes, it is. I'm not gonna lie about it. But it's still the buyer's like personal business.
I'm the
I don't
realtor.
think so.
First and foremost, I don't have anything to do with their financing.
Exactly.
That's their lender.
Yeah.
So
Right.
what you calling me, asking me about their financing
Right.
for?
So
That's not my job.
does your pre-approval letter say, some of them say conventional Mishta, some of them just say conventional.
I always put Mishta on there.
Oh, the
Right.
pre-approval.
Because
So
it
that's
takes
what I'm
heat off of you
saying.
too. Because if the seller's agent is calling you like, okay, it's 45 days
Makes
in
for a
while we
miserable
haven't
2
closed,
weeks.
and now you're like, well, Mishta is on day number
Yeah.
6, and then the file was submitted on this day. So really, that means, yeah.
No, and I feel like
Go ahead.
when you're accepting one of those like 45-day closes, you have
Right.
to understand it's 45 for a reason.
I mean, if you
or
do
if it's like
that-
not truthful too, like
Yeah.
that's not, you can't be doing that.
It's not really not truthful because, I mean, like I said, to me, it's subjective, right?
Yeah.
Because in no other situation are we asking a person where they're getting their down payment
Right.
from. We're not writing offers saying, yeah, my grandmother's going to give me the down
Right. That
payment
makes sense.
for this.
That's true, but it impacts the time frame.
If you're lying,
So, like,
yeah.
Yeah, so if you submit an offer to an agent and you write it up as conventional, and I see it's 45 days, I may just be fine with that. I don't care how you get there as long as you get there, right? But I'm talking about the agents that submit 30 days,
Yeah.
and the loan rep put conventional on there, and then 3 or 4 weeks in, I find out it's Mishta.
Yeah.
But they lied.
That's
Yeah.
that's
different.
equivalent to somebody
Yeah.
submitting. We used to get this. People would submit a conventional offer, knowing God, they know they couldn't go conventional
Yeah.
at start. Then you get it accepted, everything passes. Then we like, where's the appraisal at? We haven't ordered it yet. Then you call back. Oh, the agent didn't tell you after I called the loan rep. The agent didn't tell you we gotta switch this to FHA. Now my seller who accepted this deal over other FHA offers is looking like,
Yeah.
so I think there should be, as long as, I don't care if it's Mishta or not, as long as the time frame.
But the purchase agreement asks for type of financing.
Yeah.
So if you go on there and you put in the type of financing that is going to be conventional and then it's not, you know.
Well, he's saying it changed.
Well, I'm saying
Wait, no, I understand what,
if it's
what you're
conventional 45 days to close, I probably would know something.
Yeah, that's what I was about to say.
I'm cool with that.
Well, as the listing agent, you've been doing this long enough. If you see 45 days on there, you should automatically be like, now you're going to go call Johnny and ask that question, right?
I probably wouldn't even ask. I just know, hey, I'm going to call a loan rep and say, you can get this done in 45 days. He's going to say, yeah, maybe sooner. But I'm cool with that because the seller accepted that it was 45 days.
Well, I'm going to do that prior to accepting the offer. So prior to accepting the offer, I'm going to, when I see the 45 days, now I am going to take that into consideration this is most likely a missed loan, right? That's why they ask for 45 days.
Right.
Yeah.
I just don't like the bait and switch.
No.
That's what I'm saying.
No,
with the conventional, we got it accepted under conventional, but it's all these other stipulations that go with it.
Right.
And 30 days was never possible.
Yeah, and Mr., like he said, is finicky shit. You know what I mean? You got to be careful when you're accepting a Mr. Or somebody that's doing a Mr. down payment assistance with their loan.
So one of the things that I've liked about being in communication with you is I can talk to you.
Okay.
And a lot of times when you get lenders that work for a bank directly, that can be a hard task.
Yeah.
Just getting that person on the phone.
Okay.
Because, I don't know, they're like processing. They don't really, I don't know.
It's some crappy loan reps out here that don't
sure.
respond, that don't know how to communicate. Somebody's always emailing, never making a phone call.
Yeah.
So, yeah.
Yeah, and people being able to get in contact with their lender, I think is, fairly important.
Absolutely.
Are there any other programs that you're like specializing in? Or are these like the ones but are you doing like any jumbo loans or any like creative jumbo loans or
So
USDA?
we do like a 7-1 ARM. Right now, let's say like the pricing's always 0.75 lower. And with a jumbo, that's a huge difference in the monthly payment. And then we do a professional loan. So it's a 0% down, no PMI, up to $1 million. That's if you're a nurse, a CPA, an attorney, a dentist, a doctor, lawyer, and a pilot. So typically doctors are very familiar with these programs.
Wait a minute, man. You can't be a realtor?
No. That
what
would
about
be.
if you're an entertainer? What if you're an entertainer?
No, it's just
That's
like
just
it's
risky,
more medical.
huh?
Yeah, it's more medical.
Oh,
field.
medical.
Yeah, it's all those medical professions. But nurses don't know about it often. Dentists don't know about it often. MSPA.
Right.
They get it too. So, and that one's a 720 credit score, but it's also on an ARM. But when you're thinking about it, if you're buying a house at $600K, no down payment, no PMI, like you can get that house for $12,000, $15K depending on taxes. Like, that opens a door for that dentist that just graduated from school.
Right.
It's flexible with the student loans. They have the income, but they don't have the savings because of the situation they've been in. So it gets that person in for a pretty good deal.
I got a question about the destination home loan.
Yep.
So is there a rate increase with that?
So yes, there is. That's a good question. So you asked me to quote some stuff. So it was at 7.243% today. But you also got to keep in mind there's no PMI on it. So that helps make up for it. Right. And then at the same time, it's because the credit score would be below a 680.
Right.
That interest rate's not that great. So on a 680, the 7,500, for example, that interest rate today was a 6.125. So
Which one was that?
The 7,500. So to answer your question, it is a % higher, but there isn't PMI on it.
And no down payment.
Right.
So you're coming out. So they're saving.
You're still coming out winning.
So you're not. So you get your 3% or your 4%. So you get your 4% seller concessions.
Right.
You have, instead of you having your 3% down, that's gone.
Mm-hmm.
Right.
You have no PMI.
Mm-hmm.
Right.
And all you. So you can work that to where they can only come out of $1,000.
Right, and then you can open the bank account, get the 750 too. So there's a lot of functions for these people.
What are the benefits? Oh, go ahead.
I'm sorry, but and with the interest rate, I think more people should speak to their loan officer so they can compare like the rate. So like if if I didn't get 5.5, but I got a 6.2, and now I don't have the PMI. Like, I think understanding those numbers, because when people are looking at like interest rate, they just automatically go, oh, like the interest rate's high, and so I don't want the product. But you probably only pay an additional $50 or something. I don't know.
Right. No, I mean, for sure. I was just pricing one out with this lady. She's looking 180 in Southfield. Her credit was decent. It was a 0.25. I did a 6 and a 6.25. I showed her the difference. It was $28 a month. So people will get really like sticker shock with this interest rate. Oh, it's a 5.99 versus a 6.3. It's really not that much money monthly.
Unless you buy
unless you're buying a big home. But you know.
But then if you got in zero down, you got all that money up front anyway. So you save $6,000 up front, and you pay an extra $28 a month. It's gonna take a while to make up for that.
And if you really want the interest rate and you have the extra money, you can always buy points. You can buy the rate down. But I'm not a big fan of buying the rate down.
Neither is Shaka.
No, well, not anymore, because the way that they buy the rate down now is different. You're not really. I
don't think it makes sense in some of these price points.
Yeah, well, because they're not doing. So you used to be able to literally buy the rate down. Like, they're cheating now. I don't even know. It doesn't even make sense. There's no rhyme or reason that I see when you're buying the rate. It's not like you spend $3,000 for 1 point or something. It used to be 1 point. You know what I'm saying? But now
1 full point.
It's not. And like, that's the thing. Let's say if you spend $2,000 up front, it only saves you, let's just say, like $60 a month, depending on your loan size. You take 2,000 over 60, and how many months is that? And then are you going to be in the house for that long? Are the rates not going to drop? You're not going to get relocated because it's a sunk cost. You don't get your points back or the fees that you paid for the points. So I would much rather have people just save their money, invest it, and then we'll refinance you when it comes time.
I just need them to be. Banks are not being honest. Like, just be forthcoming. Like, you know what I mean? Let's tell us what it is. How much? You know what I mean? Like, what am I paying for? What's Just go back to the old days.
Because I do that example for people, and they're like, I'm not buying points. I'm like, that's I mean, that's what I thought. So I mean, that's what I do. I look at myself as an educator. I say A, B, and C. These are the routes they go. Which one do you want to do?
Right.
And I try to just kind of paint the picture for people of what's the options. So.
I had a question, but I forgot because Shirley Temple cut me off.
I'm sorry.
I wanted to just say something about your curls, though. I had to call you Shirley. 'Cause she said she's not going to have them for long. I know what I was going to ask you. All right, Flagstar Bank, right? What would be the benefits of going to a bank other than getting those good credits towards your bank account than going to like a mortgage company or mortgage broker?
To be honest, I don't think there's a huge difference. I think it depends on the individual, because I'm sure people have had amazing experiences with Flagstar and maybe not have had as good as other ones. And, let's just say, mortgage bank broker one, whatever. Something to fill in the blanks. It's just, I think it depends on the person you're working with. Same thing with a realtor. It's, not everybody at EXP or KW is the same agent. So I think the biggest thing, like, if you're out there, talk to like 3 different banks, especially if you're a first-time home buyer. They have programs. Or if you're shopping rates, see what works, see who you vibe with. Like you said, you want someone that's going to communicate with you. You're not only buying a house once, twice, maybe 3 times in your life. You don't know what you don't know, and you need somebody that's available. So I think that's the biggest thing, is just service. So, and the representative in the program. So
do you find that LOs at a bank versus LOs at like a lender that's getting paid commission only, or the LOs at Flagstar getting paid salary plus commission, or some type of?
I'm not sure if I can answer that on camera.
Okay, all right. Well, because the reason I asked, the perception is that people that are doing loans that are getting paid a salary don't work as hard. So I just want to clarify that myth, because some people think that, if I go to a bank, they're going to get paid regardless if the loan's closed or not. And that's not true.
I don't get paid if the loan doesn't close. I can tell you that.
Okay, all right.
And you probably got a quota. You're gonna get fired.
Right.
If you don't close a certain amount.
I just wanted to debunk that myth, because people are like, well, if I go here, they don't really care if my loan closed or not. And I'm like, where did you get that from? They care because they have other goals or whatever it is they have to meet, quotas or whatever. And they have these loans for a reason, because they need to get the money out.
Right.
So,
okay. No, for sure. I mean, I guess another advantage is, like, Flagstar has like different credit cards that you can open with them. Like,
Right.
You know, there's bank accounts, so you can kind of keep everything at one-stop shopping.
Right.
So that might be a benefit. Another thing about it.
So we're just gonna gloss over this professional loan.
I mean, if you want to, we can get back
Well,
into it.
realtors gonna qualify.
Yeah,
You know,
realtors
I'm
don't
just
qualify.
Realtors-
But
Do you qualify? No.
no,
I already know. Like,
yeah.
are they saying that this is like an incentive or a grant or a give back to, or is it just what it is? We know these people are going to eventually make some money, so we want to invest into
I
them.
think it's number 2.
Yeah,
Okay.
exactly what it is.
Yeah. So I mean, at the same time, like
Really?
you have to be pretty smart to go for 4 years of school, and then the additional school that it takes to be a dentist. So you know, your credit's intact. It is a 720, so it's not. That's a pretty not a hard credit score, but you have to have your ducks in a row to have a 720 or higher. So it's not. You know,
That's a good loan.
And they're considered
low
high.
risk.
They're considered high income, high credit score,
right?
and they probably just like you said, they don't have a down payment because they're fresh out of school or something like that.
They about to be successful. You know what I mean? They're on the track to be successful. They're
It's
gonna
a
pay their
good bet.
bills, right?
It's
Yeah.
a good bet.
Yeah.
We're gonna gamble on.
Can they get money? Can they get concessions paid? Okay. And then you said this is an ARM, adjustable rate. Because people are
7 year.
terrified of adjustable rate mortgages, right?
They shouldn't be, but they are.
Why shouldn't they be?
Because statistics show that you're not in your mortgage for 7 years or more. And what that means is you can refinance or you're probably going to sell or move. Like, for example, the last couple of years, the rates have been dipping. I refinanced the same lady in Detroit 3 times in 18 months. So she had a new loan every 6
She
months.
said, "Let me get that 2. Let me get that 5. Let me get that 4. Let
Yeah,
me get
that's
that
kind of
3.
how it went.
Right.
Yeah, that's how it went, and it's nice because all your documents are on file. You have a relationship with that person. You know everything about them. They know you, and it's very smooth. So, the ARM, why you do it is because it gives you a lower rate. In the professional loan, it's just part of the program, but with the ARM, it's giving you a lower interest rate for 7 years with the hope that you would then refinance. There is that where people aren't paying attention in the 7 years and they do let it pop. That does happen, but that's something you got to be on top of. And that's another reason why you pick a good loan officer, because I know 100% when those rates are going to pop, and I'm calling you before that because I want to protect you. So
And
Put
if
it on
not,
your
they
calendar.
will call you.
yeah,
Like when you close a loan, go to your calendar and your email
yeah.
and put a reminder.
At
No, for sure.
6.5 years.
6.5 years, Google's going to randomly remind you.
Yeah.
Every year. You
Every
should
year.
be getting it every year.
Exactly.
Well,
I mean,
6
Remind
years
me
from now,
yearly.
Amazon gonna remind you.
It should be a red alert in 6
Right.
years.
Kind of speaking about that too, one thing I wanted to kind of debunk, and as far as the average buyer, as far as interest rates, people always look at websites, and it's, you know, Chase, Bank of America, it's always quoted with a point, meaning that there is that point involved. So the actual rate without points is a little bit higher, but it's very smart right now for like the next 15 months. If you know you don't have a loan officer that's reaching out to you to watch the rates, because you probably bought your house within the last 6 months when they were higher, and if you don't get on top of it, and let's say your loan officer goes to a different company or whatever, nobody's out there like protecting you. Like, you need to protect yourself, so you need to understand what the market rate is, or at least know somebody in the business that then you can reach out to that will tell you.
Right.
Because I will tell you the second it happens, because I want to refinance, because I want to make sure your payment's less, and the benefits that the bank gets from that as well.
Sweet.
All right, I got one last question.
Yeah.
Are you guys doing the 2-1s and the 3-1s and all that?
No.
Okay. Those are the buy down programs, by the way.
Yeah.
But, okay.
Do you like those programs?
I think that for people who are terrified of ARMs, that they can be, and people who are terrified of the current rates, they can be very helpful to adjust into that today's rate.
Okay.
Yeah.
Okay. I'm not a big fan of them, just because let's say if today's at a 6 and they give you a 4 for that first year, that extra 2% that you're not paying gets tacked on the back. So it's a ton of interest you're not paying, which means your principal is not getting paid down. So that's an upfront minus for me. And then I just know the American home buyer budgets for what's in front of them. They don't budget for 12 months. So what happens is that 4 is going to turn into a 5 at year 1, depending on the program. Then it's going to turn into 6. And if your housing payment's jumping that, then all of a sudden, you know, everything's going up. Eggs are expensive, inflation. If you don't have the budget for it, like, I don't know. That's the thing that worries about me.
I
Is
kind of didn't get, I didn't, you missed me.
yeah.
He said that so you're really that interest that you're saving is going on the back of the loan. It's not going away.
Yeah, you still pay it back.
You still got to pay it, and then you paying. So even when you get to your regular rate, shit, you paying more. Yeah, so that's a trick. That's a horrible product.
Yeah, it's not supposed to get tacked on to the back though. The way that
where's it gonna go?
You're paying.
It depends on who explained it to you.
Well, I mean, if you think about it, where does it go? Like, I mean, it's not. Yeah. It ain't.
Where does the interest go when you buy it down?
Yeah, that's the point. So you got so right now you had that lower interest rate, but it's going to go up, right? And as your interest rate goes up, then that means the amount of interest that you owe increases, right?
Yeah.
That's why you got to. So it has to be something you have to pay it.
Right.
You know what I mean? And they're basically giving you a short term.
It's like a relief. Yeah, it's like a 12-month relief.
Like right now, but you still got to pay it.
Yeah.
You didn't pay it. You know what I mean? That money is still owed. Like if you look at an amortization table and you would look at your principal and interest payments, that's the best way to do it, though. Let's do that one show.
We got to start doing air charts when we talk and writing this stuff out.
Yeah,
because
that's good.
I just listening, I can imagine some of our viewers just getting all confused when we.
Yeah, but I think it's in short. So I have to go and do some more research now because my thought was, okay, it's not going on the back because it's being paid for up front.
I don't think so.
And then it's being paid for up front by way of like it's almost like a savings account. So that's why the seller has to pay for it. And then if for some reason you refinance, that money isn't like lost, you get that money back to you.
So the seller is paying for the rate reduction.
The seller is paying for the rate reduction.
Mm-hmm.
And then if for some reason you refinance because the rate went down, that money is still coming back to you in a check. I'll
guarantee you that's not the amount that they paying ain't the amount that you saving in that. It's not interest. If you compound that interest for those 30 years, no way in the world that dollar amount doesn't equal.
When the seller pays the rate down, are they also paying seller's concessions?
They could be.
Instead of, right?
Mm-hmm.
No, they do both?
Yes.
Depends on if you have it.
You can structure it like that.
If you have enough.
Yeah, that could be negotiated. So, for instance, if it's let's say it's a $300,000 loan, and it's FHA. Now you can get up to 6% allowed, so that's $18,000.
Okay.
You may not need the entire $18,000 to go towards your closing costs. You may only need $12,000. Now to get a 2-1, maybe it only costs you $5,000. So now you can come back and say, give me the entire 6%. So that's the way I would structure that deal, present it to a seller. I would say, contribute 6%.
Yeah.
And then, I need for you to agree to sign this rate buy down sheet. So that part of the 6% can be attributed to that or contributed to that.
Okay. I get what you're saying.
Yeah.
But they could potentially use the whole $18K
towards.
So they are taking a chunk out of it because, I mean, that's tough for a seller to take a $18,000 hit on the purchase price like that.
It could be. So what is happening right now is instead of, a person, let's say a house that's on the market for 180 days, and then they get an offer saying, we'll give you the $300,000 that you're asking, but reduce it by $18,000. So instead of the agent coming in and doing a price reduction for $18,000 or $20,000, because they probably were already talking about a price reduction anyway. So they just take the offer. So now we can go ahead and move forward and close it.
Just being devil's advocate, but though if it's overpriced like that, it still has to appraise.
No, it's not necessarily overpriced. So like for instance, I had a deal like this in Waterford.
Yeah.
And we had the deal under contract for exactly $300,000. I believe it was $300,000, and the house appraised for $310,000.
So what he's saying is true, but what she's saying is it's still because when the honest truth is when people, that's why I hate price reductions, but we'll talk about that. I'll save that for another show.
Yeah,
right.
I hate them.
But you see what I'm saying?
No,
so like,
that makes sense.
If the house is still going to comp out and it appraises for what you needed to appraise for, so like in that situation, the 2-1s and the 3-1s were new, and so I was able to basically go back and say, okay, the house appraised for more. Let's increase the price and, get this back in the concession.
Okay.
We got to do an episode when we break down the principal and interest on it.
Yeah.
That could take a whole episode, kind of. Not ready for 15 minutes.
But
But
here's,
I think Flagstar still, I'm sorry, Reggie. Like, I still think what I learned today in regards to the products, like, this is super competitive. Like, I've already been sending people, you know, like just give them a call. So, like, the way I work with my clients, you know, we have people that will send them to, like, you know, hey, these are people we've been working with, like, referral partners. But I didn't know about this program. Take a look at this flyer. You know, maybe Drake can help you out. Give them a call.
Yeah, absolutely.
I think people, when they meet with a loan rep, you should really sit down and, like you said, do the comparison of the programs, compare your upfront costs, and compare your monthly payment and your long-term costs.
Absolutely.
Because a lot of people are just getting steered into just doing one program. Oh,
Yeah.
we do Mr. Or
Right.
they heard about Mr. on the street. And that's all they know, and that's all they go get.
Right.
But then they don't look at the long-term effects of that. They don't look at what their other options are to actually compare it. So you should always compare the programs. Even you should compare lenders, but you should also compare each of their programs too.
Yeah.
Yeah.
I think, and if a loan rep can explain it to you and break it down to you to where you can understand it, you might not want to deal with that loan
100%.
rep.
100%.
So it should be some education in there for somebody that doesn't know or understand it.
Yeah.
Mm-hmm.
Right.
No, I mean, for sure.
All right, Drake, where do we find you at?
Like online, like
Yep,
social media.
On the
Just-
golf course.
On the golf course, yeah. Just my Facebook. You can add me on Facebook. I don't have any other social media. Well, LinkedIn too, but
Facebook and LinkedIn.
LinkedIn, yeah.
Okay.
They can Google you, right?
They can Google me too.
Yeah, that's
you
what I'm
can
talking
Google-
about.
you
What
can
they
Google.
Googling? What's
Yeah.
the name?
Just Drake Braun, Flagstar Bank. My photo will pop up. You know, we're in Troy, we're in Detroit, so just let me know. We can set a meeting.
All right. We about to make everybody Googleable.
Right.
Right.
Yeah.
Google me. That's a wrap.